All right, what's up, everyone? Today we're going to go over the inverse dollar and gold futures chart. I like this chart a lot. It really shows the great example that the dollar has in its relationship with gold. Okay, you tend to see a very inverse relationship with the dollar and gold. And being that the green line here is going to be the inverse dollar, you'll see that it typically moves, right, in the same direction that gold futures are moving. Right. Now, this is an intermarket analysis chart comparing the performance of the inverse dollar index via negative DXY. Okay, so a lot of people don't know you can actually get inverse charts in things like TradingView and things like Thinkorswim just by simply putting a minus sign before the ticker symbol. That will invert the chart for you. So meaning when that ticker symbol normally goes up, you'll see it on the inverted chart actually going down. So that's how I was able to get this on Thinkorswim. It's a very simple, easy feature that not too many people really know about. Now, this chart is really used to analyze the relationship between the dollar strength and gold prices. Typically, there's an inverse relationship between the dollar and gold. When the dollar weakens, gold prices tend to rise as it becomes cheaper for investors holding other currencies to buy gold. Now, notice how the inverse dollar index and gold futures often move in opposite directions. Now, this is a little bit of a mistake here, okay? It's not the inverse dollar index in gold futures moving in opposite directions. It's just the regular dollar index, okay? So the dollar, tends to move opposite. So the inverse dollar index chart here really moves together with gold, right? We see this peak up here. We see a peak here shortly after gold. We see a drop in the inverse dollar. We see a drop in gold. Being that this is an inverse chart, the price of the dollar is actually rising during this period here where the chart is dropping and while the price of gold is dropping. So gold has a very, well-known and very typical inverse relationship with the dollar. Now, this chart also helps to gauge market sentiment towards the dollar and gold, with a weakening dollar often reflecting economic uncertainty or inflation concerns, which can drive up gold prices as a safe haven asset. And so the shaded gray area can be used to mark significant events or periods for further analysis. And what I've done here is I've highlighted where they're actually moving in the same direction. Now, again, being that this is an inverse dollar chart here, you're going to see them diverging. Okay. And so we see gold futures going up here, and we see our inverse dollar chart also moving down here, meaning that the actual dollar is moving up. So we have this period here where a lot of these relationships and inverse relationships, when it comes to intermarket analysis, they're not going to work 100% of the time. And what you can do is you can spot, well, who's benefiting from this, divergence of the normal trend, right? Where you have a normal relationship, and now that normal relationship is not necessarily working or not necessarily present or true. And we can see here that gold was the one really, really benefiting from this. And so if you were able to spot this early on in the trend, right, or maybe even halfway through the trend, then you could have capitalized potentially on some gold by realizing, hey, these two normally have an inverse relationship and move, in accordance with each other on an inverse relationship. But we're not seeing that here, right? And you spot that, potentially make some money off of gold, right? And what do we see now? Well, we're seeing the dollar dropping here, the inverse dollar, meaning that the dollar is going up, right? And then we're seeing gold futures also dropping here too as well. So, you know, again, we're kind of back to that normal relationship that we have where, we're seeing, downturns in the green dollar line here, downturns in the yellow gold futures chart, right? And we're getting back towards that now, starting to break out from this divergent period that we had, where we were actually seeing the dollar go up and gold prices go up at the same time. And as I mentioned before, if you're able to spot this early on in the cycle or the period or halfway through even, you could have potentially capitalized on that. By getting into some gold longs potentially here, right? So that's how I like to use this one. Okay, it's nothing to live or die by, as I mentioned. These periods, they don't always work. They are going to have periods where the normal relationship is broken. That happens with many different intermarket analysis. And you can really learn a lot and really gain a big edge in the market once you start to learn all of the different types of intermarket analysis you can do, which is why I have an intermarket analysis chart layout package. right? I've also got a market internals chart layout package, and as well as a market breadth chart layout package and some other cool ones there as well. All of those are available in the link in the description. And once you start to really learn how to use some of these properly, that's how you take the next step, right? From being just your average retail trader who is, keeping track of the S&P, keeping track of bonds, keeping track of the dollar, keeping track of gold. And then you can actually start to level up a little bit and start to point out some of these different periods, right? Where you're not seeing that normal relationship, right? And point out interesting facts and data and observe those things in real time as they're occurring. By understanding the normal relationship that certain equities have on an intermarket basis, and then realizing, when those normal relationships are broken, in the process of breaking, or could be trying to go back into their normal, trading patterns, so to speak. Once you start to understand these things, again, it's just one of the many different things that can really help to give you guys an edge. Now, appreciate you watching. Don't forget to smash the like button and subscribe for more.